Okay, stock market technical analysis. Let's dive right into it. If you guys are interested, private member group, I've been putting a lot of winning trades out there in this volatility. It's been relatively easy because we have volatility, we have key levels to watch. So I've been putting those charts out to the private member group. Feel free to check that out. Link in the description below. I only charge $5 a month. It's just, it's just kind of a minimal thing, but check it out. Okay, so triple Qs. Really, I've got some ranges, and basically that's really all that matters at this point. So on the daily chart, we've got this 500 level. It's about 500, we'll call it. We've got, several there. This is the Trump gap, the president gap right there that happened on the elections. And that seems to be the level right there that is a key level. All right, so we give that level up and we should see pretty substantial downside, but until then it is support, so we have to treat it as such. So again, I'm not really interested in being short right at that key level of support, but I am interested in shorting rallies into resistance, and that's what we got this morning. So I put that out in the private member group early this morning. Let me drop down to the hourly chart. And here's our other reaction level, our resistance. It's about 510.30, 510.43 is where I have it marked. We gapped up to that pretty much, and we're going to open right around that level. So that looked like very good resistance. I was expecting a pullback at that level, and we did get that pullback. We've pulled close back to that 500 support. So the buyers might step in now. They might step in and push it back up. And if we break above the 510.30, next level of resistance, 519. All right, I don't want to see, if you're looking for short trades, I do want to short into resistance, but I don't want to short above that level right there, above 519.22. If we go above that, I really think we're probably going to go push up towards the all-time highs and probably make a new all-time high. So for me, I'm really more interested in shorting into resistance, but not above that level. Above that level, I'll kind of just hang out, wait and see, if it's going to fail. And if it keeps pushing up, I'll look to start stopping out. So this is kind of my stop zone. And that's really it. Unless we get up there, then rallies into resistance are objective short opportunities. And we, just like we got one this morning, maybe they rally it up into the close at around 510, 30. And then again, maybe they want to have one more push up towards that 519. I could see either one of those situations. Bottom line is, shorting there is objective, shorting up here is objective, or shorting on a break of the 500 is objective. Anything else is not objective. And if you're a bull and you want to go long, you could go long at 500 because that's major support. All right, that makes a lot of sense. And again, last week I did go long that level, looking for that bounce. And so you could go long there. You could go long on a break above 510.30, or go long above a break of 519. But anything in between is just noise. So as you can see, like kind of right now, we're just in no man's land. So I'm pretty much flat. We shorted this morning, or at least I did, on the hit of that resistance. Got a nice strong pullback. From the short, that's about 1.5% or so, close to 2% really. Downside, I'm flat now because we're close to support, and I want, we need to break that support for me to want to continue to be short. So I will look to short. If there's another rally, I'll look to short into those. But I don't want to go long right here. The major posture of the market, when I look at the daily, we're kind of knocking on that support. We're coming off a divergent high, pretty impulsive leg down, so that maybe that's it. But I don't see any divergent lows telling me that that's the end of the drop. All right, we might hang out here for a few days, but I do think we're probably heading lower. So I'm not really looking for longs at this point. The long right at 500, this big impulsive drop right down to 500, yeah, that made a lot of sense. You had a big drop right to key support. You were going to get a reaction bounce, or shorts were going to cover, and we did see that. But that's done for now, so I don't think we're going to get much more bounce, but we could go up to 519. Again, I'm more interested in shorting rallies into resistance. Some of the reasons why, look at NVIDIA. Boom, making a new low today. All right, this is your market leader, NVIDIA. So don't listen to the narrative. You'll hear this narrative that there's market rotation. And when I flip over and look at the heat map, I mean, look, red in tech, and we see a little bit of green. You know, we see some green here in healthcare, and we see some green here in consumer defensive. It's risk off. The market is still in risk off mode as far as I can tell. And that tells me that the tech sector is going to continue to sell down. And due to the weighting of the tech sector, it pulls all the other stuff down. Even if it's risk off, it can kind of pull that stuff down because it's indexed to the S&P 500. Meta still seems like a great short. We do need to break the bottom support level. So you see here on the daily, we've got some support. We just hit it last week a little bit. We've been hitting it. So we need to take that out. But once we do, it should be straight to the 200-day moving average and then probably lower after that. So I still like that as kind of a catch-up trade on the downside. This one's been one of the stronger Mag 7 stocks. So I like it for a kind of a catch-up trade to the downside. Tesla, I closed out my Tesla long. I did put that out as a long in the private member group. I don't know if I put it out on the public channel. I liked it as there was a few things to like. And in general, I think you probably still could get another bounce here, to be honest. Here's the thing. On the daily chart, you've got support, all right? We just hit it again. We have nice reactions. You have the 200-day moving average just below. I think that's the, is that the simple? That is the simple, yeah, 200-day simple moving average, and it hit that on Friday, and we saw buyers step in, all right, and so that trend line's holding. They rallied that right up to the 200-day exponential moving average today, and you know, and that's it, and then it's been sold off. But here's the thing. So I exited my long this morning with a nice profit off of that bounce trade. It was really about, you know, from the 200 up to there, it was about 8%. 7-8% basically. But with the posture of the rest of the market, I thought the rest of the Qs being at resistance, it stand to reason that this thing was going to sell off too. If I figured the Qs would sell off, Tesla's going to sell off as well. So I exited my long, took the profit. At this point, we'll see. You could get another bounce. Max level would be about 325.40-ish, somewhere right in there. I think that's probably the max bounce if you're going to get one. I'm going to probably stay idle on this at this point, and not touch it. But there you go. There's a trade setup if you want it. Looking at the 10-year interest rates, the TNX continuing to sell off. Rates continue to fall. Again, there is a risk-off trade going on right now. That's what the market's telling me. So it is, you know, exiting out of tech, and they're buying bonds as a safe haven. So that is that I don't see any change there. That should continue. I put this one out here. I think it was in the private member group. URI still sitting at support. So if you roll out and look at the daily, you know, there's good support there for sure. You do have some bullish divergence. So this one I think is okay. I mean, it could, you know, if the market really starts to sell off, then yeah, you're probably going to lose support on this one. But it's got bullish divergence. You can see the momentum moving higher. We're at pretty solid support. I mean, I think you're probably still going to get a bounce there. Again, just stop slightly below that support, and that's how you manage that one. Home builders continue to look actually like a bullish setup with interest rates falling, and they've fallen quite a bit. That should be bullish for the home builders. So I definitely see a long opportunity, but nothing's triggered yet. So we have this is XHB. We've got a downtrend line to kind of follow. Not the strongest downtrend line, but possibly a wedge, possibly like a bullish falling wedge. So I think there's some more development to go here. But I don't want to short this thing. I don't want to go long. I don't want to go short. It's setting up bullish, but it's not ready to go yet. So just something to kind of keep an eye on. Let's look at like Lennar, something like that. You can see bullish falling wedge, bullish momentum on the daily chart. So everything is kind of set up bullish, but there's no breakouts, no buy signals. We need to break out of this wedge for the buy signal. And if we get that, we're probably going to get what looks to be kind of a bear market rally in this thing, depending on where we go. So maybe up to that 138, maybe up to higher than that. So no buy signals yet. I'm not stepping in on that one, but I am. It's definitely on my watch list for a long trade. These ag commodities, this one MOS, I did adjust the trend line. It obviously last week I talked about how it, kind of failed the breakout that we had. Previously I had the trend line kind of down here with the top of it right there. So that was a bullish falling wedge and we broke out, but we failed. So at this point, I really wanted to adjust my trend line to mark the top of the triangle. And I think it's something about like there. So we'll capture that most recent reaction high. We do not have a breakout. Again, I still like these. They're still set up bullish. There's big bullish divergences that have been building. And they continue to build this bullish falling wedge pattern. It broke out last week. It looked like a breakout, but that failed. So because that failed, we have to kind of contain it back within this wedge. So what I would do is wait. Again, I think it just makes sense to wait for the breakout of the wedge. We thought we had that. We thought we had it recently. We didn't. You stop out, move on, wait for the next trade setup. But it's still set up bullish. So we'll just kind of wait and watch. I don't want to short this thing with the bullish falling wedge, with the bullish divergence. It's not a short. If anything, it's a long, but maybe not a long quite yet. We got to let this continue to develop. So that's that one. NTR, if I look at the weekly, this one's clearly broken out. I mean, there's just no way to draw the chart in any other way. You have this bullish falling wedge with bullish divergence. It's clearly broken out. Backtesting today, and it can continue to backtest, or the breakout can fail. We take breakouts at face value, and if they fail, we just exit the trade. But as of right now, it's broken out, so I see more upside in this one. So we'll just continue to let that develop. So going back to the triple Qs, probably the most relevant chart, that and NVIDIA. Just watch these ranges. We break, a break above 510, 30-ish. Probably going to see it push up to 519. A break below 500 is more major damage on the daily chart, which would indicate that we've likely started to enter a correction at a minimum. If I go to the daily, from the high, they measure corrections based on the highs, but it's kind of irrelevant. But from the highs, we have fallen 8% in triple Qs. So technically not a correction. We take out that 500, drop down to the 200-day moving averages. That would probably be labeled as a correction, which is about 9 to 10%. So I could see something like that where we dip below, kind of take out those 200-day moving averages and then snap back and recover them. And then we get some sort of a bounce there as they try to hold that correction narrative and not let it, drop it further into a bear market. But yeah, again, I still see some more downside. Minimum down to those 200-day moving averages, about 2.5% or so from where we're at right now. All right, I'm going to wrap it up, get the video out, and I'll catch you guys on the next one.